All right, so I've got mine muted that I have there. So muted. All right, so I've got mine muted that I have there. So muted. All right, so I've got mine muted that I have there. So muted. All right, so good day, everybody, and welcome to the VectorVest International User Group Forum. It is Saturday, July 12th, 2025. Really good to see everybody coming out to join us and spending part of their weekend with us. As you can see on the screen, folks, this is being webcast on the VectorVest YouTube channel. The replay will be available shortly after we're done. So welcome. Please make sure your computer speakers are turned on to hear the audio portions of this webinar. And let's just take a look and see. I did see some folks from around different parts of the world already. So, hey, good to see you, Neil, out there. You can see there's Alexander Andre from Ottawa area. I'm broadcasting from the Ottawa area, so I can confirm that we are seeing sun for now. I don't know if it's going to stay that way the rest of the day. Hey, Gil, Montreal. There's Scott from Guelph, Ontario. We've got Alexander from Grenoble, France. Who else? So Haas from Decatur, Alabama. There's Marguerite from Oakville. Badger, we've got from Pembina, North Dakota. Looks like Walid from Redondo Beach, California. Tom from Burlington. There's Alan from Melbourne, Australia. So Dandenong Ranges. So once again, very international event. Always good to see that. I definitely can't hit everybody there, but we've got Raphael there in Calgary. Looks like Gary in Palo Alto. And what do we have? Tom, looks like Connecticut, USA. There's Marvin from Waterloo. Eric from Belgium. And hey, Dave from Burlington. Bill from Minnesota. Bill, good to see you out there. It's been a while since we met in Tampa once again. All right, so more from Melbourne too. It looks like Paul from Melbourne, Australia. So definitely an international event. That's why it's named so. Great to see everybody out there. Oh, I think I just saw Jess from the Philippines, and I thought I saw Philip from Nigeria too. All right, so whatever time it is that you're tuning in, hopefully everything's going good. Everybody's staying safe and healthy out there. Hopefully you're getting some good summer weather if it happens to be summer where you are. All right, so let's get right into it. We have a lot to cover as always. Let me start getting the screen going here. So here is our risk disclaimer, folks. As everybody knows, there is risk in investing. Everything you'll see in here today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so we've got the risk disclaimer out of the way. for those folks, of course, we did say this is being broadcast on YouTube. So, you know, sometimes during the broadcast, some folks will complain about poor video quality, grainy video. So here's how you can fix that. So to adjust the video quality, locate the gear icon. All right. And in my case, you can see that gear icon right down there. You click on that, it opens up the settings, and you'll see that there's a quality option. So depending on what you're using to view this, just look for the gear icon. You can see at the time that I took this snapshot, mine was set to auto, and it had decided to go to 720p. So this will depend on your internet connectivity, how good the quality is, but you will find that YouTube will automatically adjust that for you if it is in auto. All right. So if we click on quality, you can see we now get a choice, and we can take it off auto if we want and select whatever resolution we want. All right. In my case here, I picked 1080p. And now once that's done, you can see my gear icon now has HD, the HD symbol on it. All right, so that's how you can fix the poor video quality. All right, so here is our agenda for today. Once again, my pleasure to be able to host this event, Rick Franklin with VectorVest Canada. And we will be doing a global market review. All right, and some trade ideas. A little bit of change in that one this time around. You'll see once we get there. And our keynote presentation, I'm joined by none other than Mr. Ron Wheeler, manager of options trading at VectorVest. I'm sure Ron, well known around the VectorVest world. If you want to know anything about options, Ron is the guy to go to. All right, so we'll do that probably closer to around 11:45 today, and then we'll aim to adjourn by 12:30. All right, as I mentioned, replay will be available on the VectorVest YouTube channel immediately after the webinar. All right, so yeah, just checking to see who else we have coming in. Yeah. Oh, yeah. And I remember there was a comment about the nice elevator music. We've got Clay with us today, so want to say thanks to Clay because sometimes I forget by the end when we're wrapping up. But that was right out of Clay's personal music selection. Just so you know, that's typically what he likes to listen to all the time. So, and what else? So we have New Hampshire, I'm seeing, New Hampshire, Stephen. We've got the governor, Marty, there as well. And there's Blaine from Cancun, Mexico. All right. So let's get right into the global market review and see how things have been going on. I was saying, I was talking to Clay and Ron before and saying, you know, don't worry, the rest of the world, Canada right now is taking the tariff heat. So the focus is on us. We'll take it for you for now. But as I was saying that, I'm pretty sure I opened up a browser this morning, and now the European Union has the renewed tariff threat on them too. All right. But it'll be interesting to see with all of these tariff threats, what have our markets been doing? All right, so let's get right into it here. We're going to start with Canada. Here you can see the color guard for Canada. What's missing out of this color guard? Red lights. There is not one red light in the extended version of the color guard from the home page. You can see we did end up with 3 yellows on Friday. All right, market timing gauge needle straight up into the yellow. Guidance that reads the color guard is neutral. VectorVest advocates caution when buying stocks at this time. So you can see elevated level of the MTI, probably the first thing we want to make sure everybody's aware of, telling us that the market is looking toppy, maybe searching for a top. In Canada, that warning is given from the 1.20 to 1.30 level and above, and you can see we're well elevated. We hit 1.60 at one point, lost a couple points on Friday, so we're sitting at 1.58. So downside risk may outweigh upside potential. I think Jerry's been saying it best. That does not mean there isn't upside potential. And we can see we've been above 1.5 for this entire extended period of the MTI. So it doesn't mean there's no upside potential, but definitely the longer we go here, the more downside risk will outweigh upside potential. And I think everybody will agree, that the upside, as the markets have continued to move higher, have definitely been doing so with less momentum. We've seen that in a number of the indicators. And even in the latest move in Canada, you'll see once we show the market timing graph, we're getting a couple days and then consolidation. All right. So that's how things are shaping up there. If we look at a summary, well, first we'll look at what Canada has done year to date. So 7.77% return. So pretty good year with all of this noise and whatever else you want to call it going on. Pretty good year so far. Here's a summary of our proprietary market timing signals in the Canadian market. You can see the confirmed calls have been up since the 2nd of May. The DEW turned up on the 28th of April. Green light buyer just went neutral on Friday. And the primary wave you can see has been up since the 20th of June. All right, so that's the Canadian picture. We're going to find when we hit the US, unfortunately, they weren't able to escape what Canada was able to escape on Friday with a bit of a down day there. So you can see here's the Canadian or the US picture. So 3 yellow lights across the top of the color guard there as well. Market timing gauge needle in the exact same position. However, you can see the difference between Canada. VectorVest advocates caution when buying stocks at this time. In the US, VectorVest does not advocate buying any stocks at this time. What's the difference? Right here. All right, you can see the US did lose the primary wave on Friday. All right, so that's the reason for the difference in the guidance there. How has the US done so far? You can see 4.93% year to date, and you can also see the US MTI elevated as well. The warnings in the US go out at 1.50 and above. You can see they did reach 1.66. It looks like the peak on the 3rd of July, sitting at 1.61. And with the loss of the primary wave, they're in a down-up situation right now, a short-term downtrend and an underlying uptrend. However, just like some of the other markets, the U.S. had been consolidating, and due to the holiday last week, Friday, they happened to be looking at a benchmark for the primary wave at the highest point. All right, and with that down day, it went down below that benchmark. All right, here is a summary of the market timing signals on the US side. You can see the confirmed calls have been up since the 12th of May. The DEW turned up on the 23rd of April. Green light buyer went neutral on Friday as well. And there you can see the primary wave turned down, went red on Friday. All right. Here is a roundup of all of the VectorVest nations, so you can see what June looked like for all of them. You can see the US led the way there with a 3.55% gain. However, year to date, at this point, Canada leading the way with that 7.77% gain. All right, let's move on to Australia's next. So here you can see the Australian color guard, market timing gauge needle straight up into the yellow. Guidance that reads the color guard is neutral. VectorVest does not advocate buying any stocks at this time. And you can see there as well, elevated level of the MTI at 1.22. All right. And what else? What else stands out? Well, no red lights in that color guard as well. And you can see they've had some RT kicker combo confirmed red lights, just like the Canadian market had. Mind you, the last green light in the Canadian market wasn't confirmed because basically the markets have been moving up, but not a lot of momentum behind the moves of late. All right, so there is Australia, the Australian VectorVest composite up 3.74% year to date. And here is a summary of the market timing signals there. The confirmed calls have been up since the 1st of May. The DEW up since the 29th of April. You can see the green light buyer went neutral there on Friday as well, the 11th of July. And the primary wave up since the 8th of July. That brings us to the European Union. Once again, no red lights in the extended version of the color guard there. You can see 3 yellow lights across the top. Their last green light was an RT kicker confirmed green light as well. But those 3 yellows across the top, putting the market timing gauge needle straight up into the yellow there. And same guidance there. VectorVest advocates caution when buying stocks at this time. All right, elevated levels of the MTI. You can see at 1.52. So it looks like in that extended period, 1.54 on the 10th of July being the high water mark for the European Union. All right, but 1.52 as of the close on Friday. They too are in an up situation. All right, and year to date, 5.60% for the VVC, for the composite in the European Union. If we look at their market timing signals, you can see confirmed calls up on the 29th of April. DEW turned up on the 26th of June, so they did have a little bit of a change in signal there, but got that DEW back up near the end of June. Green light buyer neutral Friday on the 11th as well, and the primary wave has been back up since the 26th of June. All right, so that was a quick run through the color guards. Now let's take a look at our market timing graphs. So you can see the Canadian market has continued to be able to hit new highs here. So you'll see a bit of a difference in the markets, especially looking at the Canadian. Once we go to the US market, you'll see a bit of the difference there. So we can see with the Canadian market hitting new highs, resistance is at the latest swing high, which happens to be Thursday's session. All right, so that's the level the market will need to be able to push through to continue moving higher. And if we look at the other important levels, you can see support levels. I do have this dotted line that I've put in. We had some consolidation in this area. If the market does pull back, well, now we have consolidation right here. So we do have a pretty close level. We might expect to find support first if we do see continued pullback. But then we'd be looking at this level here before we get to the default levels of support picked up by the support resistance indicator in VectorVest. You can see a pretty good level back right here, and then this one as well. You can also see the 65-day moving average moving through these two levels of support. You can clearly see here all of our proprietary market timing indicators operating well above 1 in the Canadian market. All right. So that's the look there. If we go into the US, you can see the US hasn't been able to eclipse the high from back in November, I believe that was. All right, but you can see once again the default settings of support and resistance really doing a nice job here of giving us the important levels. It took a while for the US to be able to get through this level here. You can see, and then they came and actually retested it, dropped down below, ended up having to push through as resistance again. Eventually, we're able to get through there, and then ended up getting through this level here fairly easily, but not without a retest, right? You can see the retest the very next day there. And now they've just been basically consolidating. And this is what I was talking about. This was Friday. You can see the down day they had. Unfortunately, this candle right here, the top of the body of that green candle, was their benchmark for the primary wave. That's why signal was lost. So going into next week, we'll see how things play out. But if they do stay in consolidation range here, just like for Canada, we're not out of the woods. You might see some oscillations next week if we do stay range bound. All right, but you can see resistance is the swing high from November. That's the level that market will need to be able to push through to continue moving higher. And if they do continue to pull back, we have this close level of support right here. If that fails to hold, we've got another level of support right down here. You can see close to the $71 level there. Once again, you can see all of the market timing indicators here operating nicely above one in the US market as well. There were divergences, bearish divergences that had crept in some of the markets between price action and our market timing indicators, but those have been nullified in most markets. All right, so that's the US picture. Here's Australia. So Australia, like Canada, was able to put in a new high of late. Now that's probably about 2.5 weeks ago at this point. All right, so you can see for the Australian market, resistance at that previous swing high as well, and they've been consolidating too. So common theme right now, but once again, like we saw in Canada and the US, you can see a pretty nice uptrend since April in amongst all of this tariff noise, etc. All right, so consolidating there as well, and resistance up here they need to push through. If we look at support, they're range bound, and I probably should have drawn it on here, but this is a pretty obvious level right here that you see they've been pinned between. So this is obviously providing a level of support. You have you have an old top here. They stuck their nose above that in that area, but you can see once again right in this area that acted as resistance as the market continued to try to move higher. So they are looking to get support at that level as they consolidate. All right, but support down there, and then you have another support level here. You can see their 65-day moving average in between these two support levels as well. All right, and it is the Australian market that we are still seeing some bearish divergence. If you look, price action continuing to put in higher highs through this level. The MTI, the buy to sell ratio, haven't been able to. You can see RT was. All right, so and even the buy to sell ratio got pretty close right in that area. So it might be a little bit more apparent in the MTI for that market. All right, so looking at the European Union next, you can see that market, again, nice uptrend since April. And they were able to put in a new 52-week high in Thursday's session as well. Suffered that pullback like everybody else. You can see resistance at the swing high from Thursday. So once again, they'll need to be able to push through that level to keep the market moving higher. And you can see they have a pretty close level of support. And they just seem to be on either side of that line right now, picked up by the default settings. And if that level doesn't hold, you can see another level of support here, and then another fairly close level right below that. You can also see the 65-day moving average right up pretty much at the absolute line of this support zone here. All right, there you can see all of the market timing indicators operating nicely above 1 there as well. All right, so that takes us through the color guards and the market timing graphs. Now we're going to head to the global market tracking ETFs. These you find in the US software under the cherry picking watch list. All right, so you can see from last month, May, how things were shaping up here with the global market tracking ETFs. We had 41 winners, 2 losers. And what happened? Well, we've got the leaders, but obviously that count, I'm going to have to check on that. But we can see that there's been some change in June. You could see South Korea really moved up, ended up at the top of the list here. You've got South Korea, Israel, Taiwan, MSCI Emerging Markets Asia, and then the NASDAQ rounding out the top 5. All right, as a basket, outperforming a bit, 4.24% there. Versus 3.55% for the VectorVest composite over the month of June. All right, if we go to the next slide, we've got the June graphic on the left side now, the same thing we saw on the right side of the previous slide, and now we're looking at 2025 year to date. You can see Greece at the top of the list, and you can see 57.23% return for Greece. Poland also doing very well there. South Korea, Spain, and Italy rounding out the top 5. So pretty good performance there. As a basket, 21.59% return year to date. Versus the VectorVest composite at 4.93%. That brings us to the sector ETFs, also in the US software, also found in the watch list cherry picking folder. All right, and you can see 2025 year to date. And we're going to be talking about this in a few minutes, but you can see at the top of the list here again, GDX. So gold has been on a pretty good run. It's been range bound of late, but pretty good run for the year so far. You can see up 54.59%. GDX, of course, a gold miner ETF in the US market. You can see metals and mining. Closely related, obviously, XME right below that, 28.86% gain year to date, followed by semiconductors at 18.71. We've got next gen multimedia and gaming, I think that is, at 16.55%. And then you can see solar has come up, and they're now in that 5th position with a 15% gain. I thought that's been interesting. We've seen a move in the clean energy group, and if we look at the 10-day delta, look at who's at the top here. We've got TAN, so that's solar, and then you've got Invesco Clean Energy at the in second place there. So we've got an 11.05% for TAN in the last 10 days, 9.73% for PBW. You can see oil services, metals, home builders rounding out the top 5 there. So this administration is supposed to be the drill baby drill administration and not so friendly for clean energy. But are we seeing something in the numbers that we're looking at with these sector ETFs. Really nice, the global tracking market ETFs. Really good to follow those and invest in those if you want to diversify and get your money working in other parts of the world, and giving you a good gauge of who's performing well out there in other parts of the world when, say, your market may not be. And then the sector ETFs are really good at nailing down who the moving sectors are, as that sometimes changes and rotates. All right, so that now takes us to central bank rate announcements. So this international forum a little bit later, with Independence Day weekend last weekend in the U.S. So we have June pretty well behind us. We had some mixed results in June. Most of the central banks held, but you can see the European Union did continue to cut rates. So if you look at them on the 5th of June, of course, we know the U.S. held, and you can see the Bank of England there held as well. We didn't have Australia in the picture in June. However, if we go to July, we can see Australia is already behind us. So on Monday, they were expecting a decrease. They didn't get it. The Royal Bank of Australia held instead at 3.85%. We've got through the U.S. FOMC meeting minutes this past week. So the main ones we're looking at, you can see the European Union coming back up on the 24th of July, closer to the end of the month. And then you can see on the 30th, we're going to have the Bank of Canada, the U.S. Fed, and Japan all reporting or all coming out with their interest rate decision on the 30th of July. I don't know if folks remember last July, but last July the drama was the U.S. and Japan. All right, Japan, I think that was their first raise of interest rates. The U.S. hadn't done anything in their call last July. Bank of Japan raised, and we had the markets already in a bit of a downtrend, and then we had that whole Japan carry trade unwinding affect the markets. Only seemed to work or happen right around that time. None of the changes after that seemed to reignite that. So we'll see how that plays out. But you can see both the U.S. and Japan and Canada on the same day there. All right, so those are the July central bank rate announcements that might affect our trading activity. Here we've got the summary of the weekly essays from around the VectorVest world. Another great week of essays here, folks. You can see out of the U.S., Angela Akers wrote one entitled "Letting the Financial Freedom Bell Ring." So how to use VectorVest to find explosive stocks like NVIDIA, for example, early in the game. Out of Canada, Don Reitzma wrote one entitled Superstar Stocks Bonus. So he had a part 1 and a part 2 in his previous essays. So this was a bonus round, how to use VectorVest to find stocks with good long-term performance characteristics. The European Union, Susan Hayes Culleton wrote one entitled Wise Words from Jim Penna, part 2. And do want to say, folks, so this was in remembrance, excerpts from a recent interview that Jim had done with one of the European forums. So just wanted to pass on, folks, that everybody is very appreciative of all the great words and all of the sharing of everybody's feelings with the passing of Jim. Yeah, very important in the VectorVest world, obviously, and quite a loss for all of us, including you. You're all part of the extended family here. All right. So out of Australia, Robert and Russell Markham wrote one entitled No Rate Cut Yet. So how to use VectorVest to get a real indication of the status of the current economic conditions by looking at the truth chart. So if you haven't read Robert and Russell's essay yet, they're definitely not too impressed that they didn't get that rate cut in Australia. All right, so once again, another great week of essays, folks. If you do see something that you haven't had a chance to review that interests you, just remember with VectorVest 7, you can log into any of the countries by choosing that flag on the login screen and using your normal username and password to log in. You can then go to the Views tab and go to last Friday's views to see those essays. All right. The July Almanac. So according to Hirsch and Mistel Stock Traders Almanac, July is the best month of the third quarter, bringing an inflow of retirement funds. Nevertheless, that doesn't always mean there will be gains. The VectorVest Almanac shows that over the last 29 years, the price of the VectorVest composite has experienced 15 winning Julys with an average gain of 4.14%, 14 losing Julys with an average loss of 3.38%. And additionally, we need to beware of the July high. So if we refer to Dr. Leto's July 20th, 2007 essay, he mentions in there July has a sneaky habit of peaking early in the month before crashing. All right, so, and we did see in all of our markets a bit of a turn down on Friday. Mind you, that seemed to be related to some of the tariff threats again. All right, so that brings us to the earnings update. So we did already begin Q2 earnings, and you can see at this point 4% of the S&P 500 companies have reported, 71% beating the bottom line, and 81% beating the top line at this point. So very early in the earnings season. I don't think the U.S. banks have quite started yet, so they're usually right at the beginning of the earnings season as well. All right, so let's jump into trade ideas here. So looking back at previous international forums, I know that commodities were covered before and covered quite well. So this month I decided to bring in commodities here, and we'll probably make this a regular segment on top of different trade ideas. We'll probably just get through the commodities this time. For those that don't know, I love my commodities. I think commodities should have a place in everybody's portfolio, a rightful place. You know, just like Ron will tell you that that options should have a place in everybody's portfolio. So part of the weekly market update every Tuesday, we end up covering commodities. So I'm just going to go through here. Why invest in commodities, pros and cons. I've been investing in them for many years. Always, if I sell a commodity position, I'm always immediately looking for another entry because typically I do want at least certain ones, gold for sure, a part of my portfolio at all times. So you can see here, investing in commodities can help diversify your portfolio, offering a hedge against inflation and currency fluctuations. At times, commodities can move counter the market. They move in their own cycles. All right, so unlike traditional assets like stocks and bonds, commodities such as gold, oil, and agricultural products often move independently from market trends, providing a potential buffer in times of economic uncertainty. But we've got the big but. There's always a but. Commodities also come with risks, including price volatility driven by geopolitical events and natural disasters. They have natural disasters. There could be also, human cause disasters. All right, so that's pretty quick. We could go obviously a lot more in depth there. And just to give you an idea of where commodities might fit in a portfolio, I did include, this is something that I've covered in the past in the weekly market update, a few different portfolio models, this one being Ray Dalio's all-weather portfolio. You can see basically the breakdown that he has there, and you can see gold making up 7.5% of that portfolio model, and other commodities making up another 7.5 for about 15% there. These, of course, are personal preference. Some folks don't want to invest in commodities. Other folks do. Some a larger amount, some a smaller amount. Here you can see a Harry Brown's permanent portfolio. In this one, you can see gold making up 25% of that portfolio. And this one here is a 2020 or 25, 25, 25, 25 portfolio called the permanent portfolio allocation. And you can see the original permanent portfolio there, and then an enhanced permanent portfolio. And you can see gold and other commodities with a slice of the pie right in here. All right. So it went from about 25% gold there to a smaller slice when you look at it in the overall 25, 25, 25, 25. All right. So I believe that's my last slide there. All right, so what we're going to do is I'm going to go to the US software. So every country is going to have, their own ETFs, most likely, that cover commodities. They're going to have individual stocks, of course. And so some folks like to invest in individual stocks. Some like to invest in ETFs. If you're concerned about commodities, but want to dip your toe in the water, typically I would say it would be better to go with an ETF than individual stocks, because, obviously you kind of diversify your risk there. And if you do have that single company that has an issue, like, who knows, what have we seen in the past history? All of a sudden they've been saying, oh yeah, we're drilling here, all kinds of gold, all kinds of gold. You find out there's no gold, and that changes everything, of course. So on the US side, what we'll typically do is we'll look at GLD for physical gold. We'll look at GDX for gold miners. We'll look at SLV for silver, physical silver. We'll look at XLE for energy or petroleum. We'll look at URA for uranium, and we'll look at LIT for lithium. And you can see that I've already have levels on my graphs. We're looking at the NPI setup typically when we're looking at these. So you can see, if you're not aware of the NPI setup, we're looking at moving averages, 2 moving averages on RT, a 5 moving average and a 40 moving average. And then we're looking at 2 moving averages on the top graph of stop, also a 5 and a 40. The bottom graph we use as a trigger indication. All right, so if we have the 5 moving average moving up and crossing the 40, that's typically looked at as a trigger. If it moves back down below, like you see here, it's a breakdown of the trigger. And then you can see at the top graph, we use those same moving averages on stop for a trend indication. All right, so in the same sense, the 5 moving average, and gold has been moving so nicely here that we haven't had a lot of breakdowns. Right in that area there, you might see a little bit of breakdown. So the 5 moving average of stop crossing the 40 is a trend cross. All right, and then obviously if it breaks down below the 40, that's a breakdown in trend. So you can see for the most part, just looking at GLD, we've had trend intact for quite some time in this nice run up that gold has had. All right, you can see we had a trigger breakdown once it hit that high back on the 22nd of April. Oh, sorry. Thanks, Ron. It saved. Here I am. I'm going away. I'm on a different screen here. Sorry about that, folks. All right, so we're going to start again on GLD, so everybody can see what I was talking about. So I have them all entered in here. I mentioned GLD, SLV, GDX, LIT, EURA. So looking at GLD, I'll go over the NPI setup here again. I was in my own little world there, Ron. All right, so here's the lower graph area that I was talking about. All right, so you can see our 5 and 40 moving average of RT. And as I was mentioning, we use this for a trigger. And you can see the 5 moving average of RT. Anytime it crosses the 40, that would be looked at as a trigger to possibly enter a trade. And then when the 5 moving average crosses below the 40, that would be a breakdown and trigger where and this is kind of a swing trader's model and a long-term investor's model. The bottom graph kind of looking at the swing trader, where the swing trader may use the bullish cross to enter and the bearish cross to exit the position. And then above, I mentioned that we had the 5 and the 40 moving average of stop being used here as a guide for trend, and could be used for longer term traders to stay in positions longer. All right, so you can see we've had trend for quite some time with GLD and this nice run up of gold. You can see that trigger did break down after we hit the swing high here in on the 22nd of April. And you can see since the 22nd of April, GLD for physical gold has been range bound and basically consolidating. We've had these levels in here for quite some time. So you can see 317.63 as resistance, and 299.38 we'll call it for support. And you can see how nicely GLD has been respecting our support and resistance lines here as it remains range bound and continues to just kind of consolidate here. All right. So with GLD, we'd be looking, if it does continue to move to the upside, you can see a good day on Friday once again. If it continues to move to the upside there, then we'll look to see if it can break through resistance. If it pulls back, we'll look to see whether support continues to hold. All right, here's GDX for miners. Just going to take last close off there. And you can see exact same setup here. So you can see no trigger at this point. We do have trend and have had trend intact for a while. The miners were able to hit a new high in June, on the 13th of June, looking at GDX. And you can see once they hit that new high, they did pull back, respected this level of support at 50.67. And resistance we have, you see an old top here, a bunch of touches in through here, and they've been range bound consolidating between 50.67 and 52.72. Here's SLV for silver. So silver was range bound in between support of 32.08 and resistance at 33.89, but you can see Friday, big day for silver. A lot of people have been saying, what's going on? When's the big breakout in silver happening? You can see a pretty powerful day on Friday. You can see they do have trend intact. Trigger had broken down while they consolidated in this area. So we'll see if they can get follow through to that and continue to run. Here is XLE for the energy sector. out of the US. You can see both trigger and trend in play. And basically with XLE, we'd been tracking a trading range for most of last year into this year between 94.16 and 84.09. You can see they're still within that range for a certain period of time. They dropped down. We had a support level down here at 79.85. All right, they dropped down below that, got right back within a channel here for a period of time before breaking back into that upper channel. So they continue to be in around the mid-range between support and resistance, and have been moving back up, and not a bad run from the low there. All right, so that's XLE for energy. Here's Ura for uranium. Uranium's had a really nice run. You can see the trigger crossover there. Now trigger has just broken down recently with the pullback and consolidation, so they just lost trigger. They do have trend in play. You can see the run up they had after breaking down trend in this area. And right now they're kind of flirting with support at 36.80. All right, good bounce off of that on Friday, and resistance at the previous swing high at 39.30. And here's LIT for lithium. Lithium can kind of tend to make you go to sleep at times, but you can see plenty of opportunities to make money there as well. And interesting to see how they're on the move. And I mentioned that those TAN and the clean energy stocks starting to get more of a lift, it seems. So you can see that LIT for lithium trying to break through resistance at 39.52. So did that on Thursday. Bit of a down day, red day, doji there on Friday. So they'll need to still confirm that they've broken through this level to see if they can continue to move higher. You can see levels of support we're looking at there at 37.96 and another level down here at 35.54. All right, both trigger and trend intact there. Okay, so that, let me get back to my slides and make sure I have those on the right screen. All right, so just wanted to mention to everybody the special presentation this week was entitled, or is entitled, Backstage Pass, First Look at VectorVest Las Vegas Investment Seminar. It was presented by Mr. Steve Chappell, Director of Trading Systems Development. Make sure if you haven't checked that one out, check that out this weekend. Pretty exciting news there with an upcoming event in Las Vegas, or Lost Wages. All right, so with all that said, let's get and bring Ron in. Ron, if you want to take over screen share. So Ron's keynote presentation, breaking down the Nets Nitro and Turbo ETF trading systems. Take it away, Ron.
All right. Well, thank you, Rick, and good to be here on a nice little Saturday here in Ohio. And supposed to get some nasty storms later today, so hopefully that'll hold off. But let's go ahead. I'm going to share my PowerPoint. There it is right there. And then let me verify that everything is looking good, and it looks like it is. Excellent. So what we're going to do today is we're going to do a review of our NASDAQ ETF trading systems. Now, the ETF trading systems, and before I even start, I got to say, I'm excited to do this because I love these breaks that I get from talking about options. And it was actually nice to see Rick talk about commodities as well. If you guys didn't know, I've got my start in the industry in commodities. I traded commodities for 10 years exclusively, gold and corn and soybeans and all that kind of stuff. So it's kind of cool to see commodities come back up too, especially on the ETF side. But it's nice to get out of the options mold that I'm so well known for and to talk about other things like stocks and the different ETF trading systems. So this all starts really from last year. And the 2024 Tampa show, we introduced a ETF QQQ trading system. And it was very popular because why wouldn't it be? Why wouldn't something that's very, very simple to trade that revolves around one symbol, why wouldn't that be really, really popular? And in that same Tampa seminar, we also kind of issued a call. We said, listen, if there's anybody out there that wants to work on this to try to make this even better, please work on it and tell us how to make it better. Because that's the beauty of our VectorVest community, right? We get to interact, we get to share, we get your experiences with things, you get our experience with things. That's the beautiful thing about the community. So back in February, not too much longer after the Tampa show, we did a special presentation, and it was actually Steve Chappell, who's the director of trading systems development. So that's kind of like right in his wheelhouse. He did a special presentation about how you can take that base QQQ ETF trading system and kind of turbocharge it, or nitro charge it, if you will, into something that's even better. So in February of 2024, and again, you can go back and if you want to get the nuts and bolts, because tonight, or I shouldn't say tonight, it's this afternoon, it's not even noon yet. This afternoon, I'm going to talk about what has been happening over the last year with that system. We'll talk about a little bit of the nuances of it and some of the differences that you see in performance over the last year or so in the systems. So that's the base strategy system right there that we taught back in February. And then also there was Don Reitzma, who actually created the system with the help of some others. He came in April of last year to the International Group User Forum, and you can watch that on the VectorVest YouTube page. And that's another great area where you can learn a lot more about this from really the developer of the system. So again, a big special shout out to those guys, Don Reitzma, Mike Ellis, Ed Sneed. They were the big contributors to the system development, and the system has been absolutely fantastic over the long haul in this. And the thing, again, I love about it is it's simple. You know, as an option trader, you know, I sometimes kind of have I live in the world of making things complicated, and I try to make it as simple as I can. But when you talk about a trading system that you're breaking down into only a couple different symbols, it doesn't get much more simple than that. And the beauty of it is, even if it isn't simple, it's automated. So the best of everything right there, right? So let's do this. Let's go into VectorVest, and I want to talk a little bit about some of the resources where we can find some of this stuff. And then I also want to break down the trading over the last year, year and a half since we introduced that system to kind of show you what the system has done, to show you the nuances between the two systems that they developed, and you know, really how we can employ these as we go into the future. So let's go to VectorVest, and let me make sure that I have YouTube running on my other screen. I want to make sure that you guys can see that. And where is it? Where is it? Where is it? There it is. There it is right there. All right, cool beans. So here we go. This is VectorVest. You guys are all familiar with this. But let's start with where we can access some of this information. First, we're going to go to viewers. And then into viewers, this is our viewers home. Over here on the trading system viewer, I'm just going to go to the trading system viewer. And I'm going to make this kind of easy. The first system, or one of the systems I should say, is right near the top. This is the Reitzma's Nets Nitro system. So that's the system right there. You can see how over 1 year it's up 31%, over the last 3 months 39%, over the last month 11%. You've got the nice little curve right here over 1 year. But what I want to do is I want to break this thing down and show you how to find all three of the systems. So the first system is the base ETF that we introduced back in Tampa of 2024. If you go up in the upper right-hand corner here, just type in QQQ and hit enter. And there it is, the QQQ ETF trading system. So you can see the performance of it, down 11% for the year, but over the past 1 month and 3 months, as the market's kind of exploded into this nice uptrend that we've got in there, obviously those shorter term returns are much, much better. Now, what I do from here, because I want to do some comparisons with these, if you click on paper trade and portfolios, and I just go right here to follow in the portfolio manager. So I added that to the portfolio manager. Then we're going to go back to the trading system viewer search up here. And we are just going to go ahead and pick up, and we're going to do NETS for Nets. And there is our Nets Nitro system. And there is the Nets Turbo system. So with each of those, we're going to do the exact same thing. We're going to right click on each one of those. I'm sorry, we're just going to click on paper trade and portfolios. follow in the portfolio manager, and then paper trading portfolios, and we're going to follow in the portfolio manager. Now you can see that with each of those trading systems, it does require Pro Trader. So that is an add-on that you would have to do to keep track of the stops and everything. But you can see that, you know, over the past year, obviously the Nitro system has performed much, much better than the Turbo system. And I'll show you the nuances of why that occurred. The Nitro system is using the triple leveraged ETF, whereas the Turbo is using the double leveraged ETF. But ultimately, well, I should say this, that is the reason why the performance is a little bit different. And again, I'm not using any subjective nuances. I'm just following the system as it lays out. So I'm not trying to add any personal notes to it or touches, but we'll take a look at each of those systems. So we could also, while we're doing this, if we click on trading system details, this will give you the breakdown of what the system is, okay? The performance. So the trading system buys the Qs and it confirmed down when 1 day ago, the 10-day moving average of RT was below the 15 moving day average of RT. And today, the 10-day MA of RT crosses above the 15-day MA of RT, and RT closes below 1.12 with no stop loss. When I first started learning about these, whoo, was that a sentence? But it's actually pretty easy once you lay it all on the screen. And again, even if you don't want to go through the system of laying this out and looking at it on a computer and looking at it on the screen of the QQQs and in this case the QLDs, you don't really have to, because we can automate this pretty easily for you. So if you want to look again at a breakdown quickly of the trading system rules, we just click it right here, trading system rules, and that'll punch up the where did it come to? Nope, that's not it. It must have popped on another screen. There it is. Okay, just took a little bit of time. So it tells you, like, right now, we're in the current, confirmed up, we're buying long, and we would be buying the QLD in a confirmed up right now. Now, we'll talk about this a little bit more in detail, because if we go over into the performance graph, you're going to see right here that we've got a nice little flat line, okay? Nice little flat line on the Turbo system, and there's a reason for that. It's because we haven't had a trade on this one as of yet, and I'll show you why. So going through some of the statistics down here, and as you can see under current holdings, there's no holdings right now. Only, you know, since the beginning of the back testing here of 2015, there's only been 49 trades. Now, the one thing that I cannot stress enough, and I'm looking at this system in particular right now, because I know what people start thinking. Well, you know, if I'd had started doing this 6 months ago or 1 year ago, I'd be down 1.93%. Or if I started a year ago, I'd be down 4.5 or down 1.93% for the year. First and foremost, understand that when you look at this thing long term, right, it's up, what is that, 1,500%? 1,541% since inception, okay? Any trading system, any strategy that you look at is going to have its peaks and valleys. It's going to have its ups and downs. You know, the story that I always tell is the whole, you know, Bernie Madoff scheme, right? People said, you know, Harry Markopoulos was the quant analyst that, you know, was first reporting him. And they asked him, and they said, you know, how did you know that this was all a scam? He said, it was very, very easy. I looked at their results. And their results were simply just a straight line going up. He's like, that's impossible. There's not going to be a system that never has any drawdown. So keep in mind, when you look at a system like this, or quite frankly, any system, there's going to be drawdowns. And as I always tell people that are embarking on a new system, whether it's an options trading strategy that I use in the URS, whether it's something like one of these with the Qs or the QLDs, remember, there's going to be ups and there's going to be downs. And I remember specifically, I don't remember who I was talking to. I think it was Jim Penna, actually. We were in Tampa in 2024, and I think Steve was breaking down a trading system, or it might even have been Glenn, who was breaking down a trading system that was up like 5,000%, right, over the past 15 or past 20 years. And I was talking to Jim, and I was laughing with him saying, you know, I don't know of a lot of people that would ever obtain those kind of results, because nobody is going to stick with it when there's drawdown, right? Drawdown's a bummer. And what happens with drawdown is it spooks you out of continuing on a system. And kind of think of this as this system right here, right? Well, Ron, I started in 2024 when you first released the system and the first system came in, and now it's down over a year, 1.9 or 1 year, 4.5%. The system doesn't work. No, the system works fine. Unfortunately, you started into a system that just had some drawdown. It's no different than if I were to look at this series right here. Well, Ron, I got into it right here, and then for the next 7-8 months, I didn't make any money. Okay, that's true, but the system at that point was up about 1,000% overall, and if you would have continued on with the system, now you'd be up 1,500%. Okay, so these systems, like any system, it's going to have their boosts, it's going to have their drawbacks. Now, the turbo system, and the reason that it's called the turbo, at least in my opinion, is that you take the QQQ, the base trading system, and then when the market really starts going into a big uptrend, right, it turbocharges it. How does it turbocharge it? By doing the QLDs instead, the 2-time leverage ETF. Now, the difference between turbo and then your Nitro system, Nitro, obviously a little bit faster, right? The Nitro uses the triple leveraged ETF. Now, the big difference in returns of these two systems over the last year is really breaking down into the last 3 to 6 months. And you can see right here, even if you had started back in the 2024, you took a big, deep pullback right there. And again, this is the kind of thing that, I've been trading now for 28 years. And this is the kind of thing that really breaks down and really hurts investors. They get into a system that has performed very, very well over the years. The one thing I always tell traders and investors is the thing I can't control is timing. Okay? What I can't control is timing. Are you going to start the system when it's going to start making money? Or are you going to have the unfortunate luck of starting into the system where it's going to have a little bit of drawdown? Okay? That we can't control. But when we hold on to something and let the system do its job over time, that's when you're really going to see the results. That's when those results are going to shine. And that's what you're seeing here over the long haul. There are periods where we're flatlined. There's going to be periods where there's drawdown. There's going to be periods where the system rallies. There's going to be drawdown again. But you got to keep a system moving to see the benefits. That's really what it's all about. And it's something that even as a newer VectorVest employee back in 2015, I had to learn. One of my first systems that I put together for my own personal trading, because I didn't trade a lot of stocks. As I said, my first 10 years in the industry, I traded commodities. But when after I traded commodities and I moved into options, which I've been trading ever since, I still didn't trade a lot of individual stocks. I traded options on them, but I never actually bought and owned a lot of stocks. So when I first learned VectorVest and I first learned some of the trading systems of VectorVest, I remember my first system that I traded. And I think for the first 2 months, it was down like 12%. And, this is something I've preached for years. You can't just base the system off of a 1-month time frame. And I remember one of my coworkers coming to me and saying, Ron, you're ready to give up the system. And guess what? You're doing the same thing you tell other people not to do. I stuck with it for the entire year. And I think it ended up the year up like 32% after a drawdown. So keep that in mind when you look at these systems, whether the results that you see are good, whether the results that you see are bad, keep in mind that, this works, okay? But you got to stay into it. So let's do this. That's the performance. Now let's talk a little bit about some of the rules first, and then we'll break down some of the more recent performance, because that's really what I want to talk about. I want to talk about the recent performance of these, not so much the since 2015. That's why you can watch the strategy the week that we did back last year. You can watch the show where Don came in and did the talk about it. You're getting it right from the creator, so that's even better. But this is the turbo system. And we talked about this a little bit here. And I took this screenshot, and I took this screenshot for a reason, because I took it right out of Steve Chappell's strategy of the week back in February of last year. So the whole idea is you start when the market's actually in a confirmed down, right? Because you want to kind of get into it as the market is starting to kind of finish that confirm down, hopefully, and you want to try to way to get into it early. So by doing that in a confirmed down, now you're coming into moving averages of relative timing. These moving averages of relative timing are going to help you try to find the turning point where the market may start coming into an upper trend. So 1 day ago, the 10-day moving average of RT is less than or equal to the 15-day moving average of RT at the close. At the current day's close, the 10-day is now above the 15. And at the current day's close, the RT is less than or equal to 1.12. And you want that RT being less than or equal to 1.12 because you don't want to get into this thing when the market's already kind of topping. So you want that RT to be lower when you first get into the Qs. Okay. Once you're in, you get out at a confirmed up signal at the current day's close and place an order to sell at the next day's open. Now, why would you do that? We're starting to come into an uptrend. Wouldn't you want to own the Qs here? Wouldn't you want to be long? Well, yeah, you do want to be long, but this is where the turbo system of this kicks in. So once that confirmed up comes in, the Qs are going to offer you kind of a safe entry into the trend of the big picture market. Now that we got that confirmed up, we're going to switch to the double leveraged ETF, the QLDs. So while that confirmed up condition is still in place, you got to make sure the RT, again, less than or equal to 1.4 at the current day's close. Okay. So again, the idea here is we don't want to get into the market when it's exploding. We want to get into the market when the RT is still lower. That way there's more run that the QLD can have and we can make some money on it. And then again, you set your 30% gain and 5% loss using the next day's open. And then the exit price is greater than or equal to a 30% gain or less than or equal to a 5% loss or a confirmed down signal at the close. You just place an order to sell the QLD at the next open. Now, let's take a look at this over the last year. Let's just take a look at the turbo system first. So I'm going to go back into VectorVest, and here's what we're going to do. I'm going to take the turbo system, all right, and I'm going to go into the back tester. So let's create a new back test for this over the last year. So I'm going to create a new back test. We're going to call this the Nets Turbo. All right. And everything is built in. That's the beauty of this. We're going to select an existing trading system. And let's see here. That's the Nitro. Actually, let me just separate it by market timing. All right, that makes it a little bit easier because these are all based on confirmed calls. And there it is right there, the Nets Turbo. We'll go ahead and select that guy. Now, what we're going to do is we're going to select a test period. And I'll just go back to when the system was introduced, because again, you can talk about performance from 2015 to 2023, 2024, but let's talk about the more recent trades with this. So I'm going to take the test period, and I'm actually going to start in March. Why March? March of 2024. I'm going to start in March of 2024 for one main reason. We did the strategy of the week in February of 2024. Gives you a couple weeks to digest it, get it ready for yourself. Let's start it in March, okay? And we'll click OK. So we'll go ahead now and run that initial investment, $100,000. Commission is $4.95 per trade. Don't use margin. And again, we're just using the base system rules here. Let's go ahead and finish and run and let that populate in there. And you can see, we'll just let that continue to go. Now remember, the turbo system is the one that hasn't performed as well. And again, I'm not knocking the system. The system's perfectly fine. It doesn't bother me that this particular system may have been a little bit less. It doesn't bother me at all. But I want to talk about the logic and the reasoning behind it. And it actually had a little bit of drawdown there too. You can see right here into that drawdown, you're down about 20%. Reached 20% drawdown right here. Scary, but again, that's what can happen. And you can see a lot of flat lines. And I'll tell you, just by watching this thing develop, this is ultimately kind of my big fear a lot of times about trading systems. You get into the trading system, maybe back here, you see some immediate drawdown, you get out of the system, then all of a sudden the next trade comes in and your drawdown comes down and it's now back up, pardon me. Excuse me. Normally I try to catch that and mute my microphone. But you see this right here, the market re-rallies a little bit, your drawdown gets knocked down from, 7% up to, only about 2% or 3%. You get back in the system, you see more drawdown. All right, I can't do this anymore. Then you get out of the system, you see the upturn, you're like, okay, I'll start again. You get back in the system, you get the drawdown. This is what I see a lot of times in traders. They don't get the advantages of the upward move. What they end up hitting was all of the downward moves because they give up too easy. Okay, so you can kind of see that the big difference here is this system has been flat over the last 3-4 months. There hasn't been any trades. Okay, now let me do this because I want to be able to switch back and forth between the turbo and the nitro. So let's do a new back test. And we're going to call this the Nets Nitro. And we're going to select an existing trading system. And there it is. I spend so much time in Options Pro. I always have a great time when I can actually do this. Oh, you know what? I didn't start that at the right time. Let's just stop that. I start getting excited about using everything and then I forget. So let's get rid of that one. Let's start a new one. I forgot to set it to March like the other system. I want to be obviously the same. So Nets. It's always fun. What I was saying is getting into the nuts and bolts of VectorVest and using some of the cool tools. I don't get to do that very often with options. So select the trading system. We're going to do the Nitro. We're going to select that guy and then change the date. I forgot to change the date. We'll go back to March of 2024, and then we'll go ahead and run that guy. Okay. Now, while it's running, I will say, if you're going to start these systems, and this is really a good time for this too, because if we look at the overall market right now, what do we see in the overall market? We see a lot of toppy behavior. We see that, the MTI is above 1.6 here in the US. We know that, upside potential is outweighed by downside risk. This is a good time to start thinking about these kind of systems because generally speaking, you want to start the system at the base QQQ level. Okay. We want to start the system at the base QQQ level. So that's really where we want to put our first trade in, as opposed to jumping into the turbo system with doing QLDs and jumping into the nitro by doing TQQQ, which is the triple leveraged ETF. So that's kind of the ideal there. But even as this system is building right now, you can see the drawdown on that system reached a maximum peak back in April of 2025 of about 15% drawdown. Okay, the max drawdown actually 20% and 30% on each of those systems. Now you see the difference. The gain and loss over the last year is 31%, and it's a 12% loss on the turbo. Now, if I go back and forth, here's what I really want you to look at. I want you to look at this area right where I'm pointing, because you're going to see the biggest majority of the gains were essentially right here. It started in May of this year, and that's when this thing really exploded. Whereas you look at the turbo, and nothing really has happened since then. There's actually no active positions right now. There's no positions in those at all. And if I break it down into the portfolio level, you can see that the turbo system, there's no system, or there's no trades on it right now. This is when I followed the portfolio. If you look at the nitro, right now it's long in the TQQQ. So let's break it down into the nitro system. Now, the one thing you're going to notice, I'm going to go flashback between each slide. There's no difference in the first part of the system. The first part of the system, if you just keep your eyes right here as I move the slides, there's no difference at all. Okay? No different at all. All right? The entry of the Qs is exactly the same. We're still using RT. We're still using, less than or equal to 1.12. The exit is exactly the same for that. Now, the difference is right here. The turbo uses the QLD, 2-time leverage. The Nitro is using the TQQQ. That's 3-time or the triple leveraged, right? Same idea, RT less than or equal to 1.4, buy at the next day's open. RT less than or equal to 1.4, buy the QLD at the next day's open. Now the QLD entry has a 30% gain and a 5% stop loss. The Nitro has a 50% gain and a 5% stop loss. So we're looking to trade more profits in the TQQ. Now, as far as the exit goes, same idea, closing price less than or equal or greater than or equal to a 30% gain, less than or equal to a 5% loss or a confirmed down signal at the close, sell it at the next day's open. And again, the only difference is with the TQQ, we're adding 20% to the gain, but everything else is basically the same. Okay. Now, what you can do is I laid all this stuff out on a graph for me just so I could see it visually. So if I go to my graphs in VectorVest, I'm just going to go to my graph. What I've done is I've essentially kind of laid all that out for myself. So you can see at the bottom here, I've got RT. I've got my moving average of RT 10 period. That's the red line. And I've got the moving average of RT the 15 period. That's my green line. I happen to be looking at the QLDs right now, but I've also got the QQQs and the TQQ loaded. Kind of see there's the base level right there of the Qs. And then what I've also done, if you want to do this too, once you set this all up, I actually saved it as a graph layout as nets. So you can go to save, modify layouts, and I created this as nets, and now I've got all that in there. Okay. So the biggest difference of what we've seen here over the past year really boils down to the last 3 months, from May 12th to July. And again, if I go to the back tester, you can kind of see where we started in May on the turbo system at about a 15% drawdown, roughly. And then we had a little bit of a trade right here. It kind of popped up. That kind of finished out a trade. And we can kind of go back and I can look at the, in the portfolios, I can look at the actual individual holdings. But the big difference is that last 3 months. Now, the Nitro system really from May was already back at a break-even level. It came off some of the worst drawdown it had, right about here. Okay, it drew down from 100,000 to 85,000, so about a 15% drawdown right there. And then it started really, really coming back. And then this in May was the big difference. So what happened in May with the Nitro versus the turbo? What really happened? What was the big difference there? Here's the big difference. Let's go to the graph. Okay, so around that time, and let me do this real quick. I'm going to go to the portfolios, or I'm going to go to the viewers, pardon me, and actually try to make this the easiest way I can. Let's go to portfolios. Let's go ahead and click on reports, and I'm going to go to my trade history report. All right, so here's the trade history report of Nitro, and these are all the trades that have been done in that system since 2015, right? So you look right here, and this right here is the last QQQ trade that was closed. All right, that was the QQQ trade that was closed on May 13th. Now the current trade that we have on right now started May 13th, and it was buying the TQQ. A lot of Qs. All right, now the turbo has no trade. And if I go to my trade history, you'll see that the last trade on this was also closed right here. Started on February 25th, closed on May 13th. If I show you both of those at the same time, take a look. It's basically the same thing. Now, the drawdown that we had in the Nitro system, you can see that loss being $114,000 versus $32,000 on the turbo. Obviously, the Nitro is a little bit more because the position sizes are larger because the returns are larger. So the drawdown was both 1.93%, but the number on the Nitro was bigger. That was the last QQQ transaction back on February 25th. So if I go back to the graph and we go back to February 25th, that comes into right about here. Okay. So right in this area right here, we had the confirmed down. It came back in December, right? But here's really where the trade came in. And the reason why the trade came in here, right, is because this is where RT dropped. This is where my RT dropped, and this is where the moving average of RT kind of kicked in. So now this is where we would buy into the Qs. All right. Now, unfortunately, that got bought into at a rough time, and that trade carried all the way into May, and it ended up at a loss. Now, what happened after that was this is where the next sequence comes in. We have a confirmed up call on May 12th. So during that area right there, you took a hit on the Qs. But now we get on May 12th, we get that confirmed up. And if you remember, this is where the system really starts to kick in. So if we're looking at the turbo, right, we're going to look for a confirmed up still in place, RT less than or equal to 1.4 at the current day's close, buy the QLD on the next day's open, set your 30% gain and 5% loss using the next day's open. So if I go back graph-wise and I look at the QLD, okay, here's the QLD. Now, the problem here is that if you look on the QLD, there was a big gap that occurred from 5.9 to the confirmed up of 5.12. Now, the big thing here is take a look at your RT. The RT is 1.45. Okay, and going back to the system rules, go back to there, the RT needs to be less than or equal to 1.4. So if you look, this is a too high of an RT to buy into the QLDs, right? Now, because of that, the system stays out of the market. If you go to the TQQ, okay, take a look. We have a confirmed up on that 5.12, but now look at your RT of 1.34. Go back to the system rules. RT less than or equal to 1.4 at the current day's close, you buy the TQQ at the next open. So that little deviation right there in the RT is what set the two systems apart for the last year. On the TQQs, the confirmed up came in, but the RT was 134. Over on the QLDs, we're at 1.45. So the QLD trade never got triggered, whereas the TQQs did get triggered, and it got into a long position right there. And that's where you see, if I look back at the back tester, right there. That's the big difference. Now, there's other differences too. You can kind of see that the Nitro had better periods of topping or going up, and it's the same basic concept, because remember, the QQQ, all right, the system to get into the QQQ is exactly the same on both systems. The difference is the Nitro is going to use the TQQQ versus the QLDs of the turbo. So the Nitro has performed well because the TQQ has been, there's a lot of Qs, man. This Qs is killing me. The TQQQ has been easier to get into. Now, in saying that, does that mean you better not trade the turbo? No, it doesn't mean you better not trade the turbo. It just means that there's a little nuance in that system that has had less winning trades and has had more sideways behavior. Okay, you can see there's still periods of sideways, 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 sideways. And then you had the big upward move here over the past 3 months. Whereas trading the QLDs, we haven't had as big of up moves, but we've had a lot more longer sideways behaviors. That's really the difference between the two. These are both really, really good systems to use. But I wanted to point out the difference in the two. And it really comes down to just that RT. And that's really what made the system different in this past year. Because really, again, if you go back to Nitro, since we introduced the system back in March of last year, really to the start was also flat. Okay. And you might say, you know what, Ron, the flat system over the past year, you know what? I'm okay with that. I'm okay with the little drawdown. I'm okay with flat. Just when you're ready to give up, boom, this thing explodes. And now all of a sudden you're up 30%, you're up, like I said, you're up, basically 30%, 23% overall on the annual rate of return. And it's like, it was one trade. So that's really the difference between the two systems. The QLD was a little bit slower to react because of the RT, whereas the Nitro system was a little bit faster. I will tell you this, I am working on getting into this myself. I'm going to start at the next confirm down, because again, I'm not going to get into the system by trading the QLDs or the TQQQs. I'm going to start the system at the base of it when the QQQ is ready to be bought. Now, the good thing is, market timing wise, like I talked about earlier, we are in a position to where we have, an MTI above 1.6. So we should be probably heading, we could be in a 1.6 for the next 3 or 4 months. But I'm looking into the system. I'm working on this. I'm studying this because I too want to take advantage of this next time we have that entry into the QQQ. So that's where the systems stand as of last year. The Nitros performed very, very well. But again, after a period of sideways behavior, but is it worth sticking to a system of sideways behavior for the better part of 9-10 months to eke out that 31% overall gain? Is it worth it? It's worth it to me, especially for a hands-off system that you don't have to touch. Would it have been worth it for me to stay in the Nets Turbo with the QLDs? Would it have been worth it? Sure, it's a hands-off system. Yes, it's down about 9% right now. That's okay. It's going to, like every other system out there, turn itself around. But again, familiarize yourself with the base concepts, okay? Familiarize yourself with those, and then ultimately be ready to employ these things when the market hits that next phase for entry when we're in a confirmed down call. So again, there's not much difference overall in these two systems. Okay, the Nitro using the triple leverage ETF just had much more, a much better crawl back, if you will, when the market went up and the drawdowns were a little bit less. And then again, that final push here, if you were looking at both systems without the difference, they'd both be, pretty much one would be flat, one would be down about 9%, except for the difference in that QQQ versus, or the TQQQ versus the QLDs. So both looking pretty strong. Okay. All right. So like I said, it's and again, this is something that's there. And then a couple of you guys kind of making the comments there. Yeah, okay, great. Don's in here too, kind of talking on this as well. So yeah, like I said, these have been really, really good systems. And you just can't do much. And yeah, and as Biggs and Little, you said it's definitely best to enter after crushing down. I agree. I like that too. I like to start the system off at the base. So I'm a big believer in that. And that's kind of the way that's kind of been in there too. So, yep. So that's exactly right. And then Alan, so that's where I'm at, down about 8%. And like I said, just kick it off. Keep it going. Don't, the key is, again, you just can't stop these systems. So I've been in this industry too long. I've seen too much where people just give up. They ride through the drawdowns and right before it takes off, it doesn't, they miss out on the big gains. Then once the big gains happen, they go right back into the system, maybe get the next drawdown. I see this in my own trading with a lot of my systems, like my S&P 500 systems that I trade, my calendar trade systems I do with options. I see this too much. I see this all through the industry. Okay. All right, but that's a quick breakdown of what we've done over the past year, or what those two systems have done. And like I said, still great systems using very simple rules. Keep it that way and let these things run. They work very, very well. Okay. All right. Back to Rick, I think. Rick, do you want to finish us off?
Sure can, Ron. Thank you very much. Excellent presentation there. Let me share my screen again. That delay is something else too, so hopefully, there we go. All right. Yeah, thanks again, Ron, and always great too. You could see we had Mike and Don coming in, answering some of the questions there as well. So always great to have that. Creators of the system, able to give some answers there. All right. So thanks again, Ron. I'm going to advance my slides here. Just want to make sure everybody's aware that the Successful Investor course is being offered once again as a free gift to members. All right, so if you do have friends, family members who aren't using VectorVest but have shown interest, you can always let them know. They could start a free trial, and with that free trial, they would be able to then sign up for the Successful Investor course for free. All right, but you can see that the live mastery sessions will be beginning on Wednesday, July 23rd. All right, and I think we have the link right there, so you can see www.vectorvest.com/TSIC. Will take you to the registration page for that. All right, so not doing too bad for time, just over the 12:30 mark. So as usual, folks, we do want to make sure we thank all of you for sharing part of your weekend with us. Want to make sure I thank Ron for that excellent presentation, Clay for everything he's doing to keep everything going there, and of course all of you once again for sharing part of your weekend. Hope you have a great rest of your weekend. I think I saw Tom and anybody else asking about slides. So slides are only passed out by request. So if you do want the slides, you can reach out to support. You can see their email down below, support@vectorvest.com. You could email me as well, rick.franklin@vectorvest.com. I do have some folks that are doing that on a regular basis. So if you do request them, we will send them out. You've got Ray's email down below, rayc@vectorvest.com, for any folks who have ideas for upcoming international forums. And also, don't forget, if you do need any help at all, don't hesitate to reach out to product support and training at 1-888-658-7638. And I'll just state once again, since this was broadcast on the VectorVest YouTube channel, you can see there the replay should be available shortly after we're done here. So with all that said, stay safe and healthy out there, folks. Have a great rest of your weekend, and we will catch you back in the markets this coming week. Bye for now.